All right, good morning, good morning. Welcome to Market Pulse this morning. Of course, we will be looking at the insurance sector and particularly looking at this coming at a time where we have seen a lot of flooding in the country. We want to know what impact has that had, of course, in the livelihood of people, and for those businesses that were not insured, what are the options for them? And this morning, I'm joined by Tom Gishohe, who is the CEO of Association of Kenya Insurers. Tom, welcome to the program.
Thank you.
All right, let's get this conversation on the road. And one of the things that I want you to help us with, we've seen the impact of the flooding, we've seen the damage it has caused over the last month or so. And I just want to understand, for customers who were, for Kenyans rather, who were not covered by insurance, where do they get their reprieve, if any?
Maybe let's start with the Kenyans who had insurance,
who are covered, yes,
who had cover and who probably continue to have the cover. Those Kenyans, of course, have the advantage that they have a fallback. They have a fallback position in the sense that they will put in their claims to the respective insurance companies who had insured them, and then they will get compensated. In other words, they are likely to be taken back to where they were before the floods. But I think so to that extent, we expect that we are going to have an elevated a number of insurance claims which are going to be reported by those persons who had taken out insurance cover and they were affected by the floods. But I think more importantly is to talk to those Kenyans who did not have insurance cover.
Yeah.
And particularly so those ones who ran the so-called small and medium enterprise businesses. You know, the position that usually they are in is one where they do not have a lot of reserves. Most of the times they rely so much on what they sold today for upkeep, and even for growing their business. So their businesses are extremely fragile.
Yeah.
So if you do not have an insurance cover and you go through the kind of flooding that we experienced, it is very easy for a business like that to be completely wiped out. Mm-hmm. So my appeal to them, to those Kenyans, is to be prepared now and in the future, because they still remain exposed. Even those ones who are not affected, they remain exposed to floods, they remain exposed to fires, they remain exposed to theft, and therefore it is important that as much as possible, they seek to have insurances to protect their assets.
All right, now, in your opening statement, you said you expect an elevated level of claims. Maybe could you tell us by what margins are you seeing these claims increasing?
Well, I may not have numbers because the claims are still coming in. I may not have the numbers to be able to give you the exact probably percentage of increase. But one thing is for certain, that we are going to have an increased number of insurance claims reported around this time, so that if you compare the insurance claims which are going to come through, now we are in May, and May last year, you're certainly going to be able to see a big difference. These claims will come in many forms, or touching different assets. You saw motor vehicles being swept away by flood waters. Now that motor vehicles account for a very big portion of the insurance business that we write, we also expect that claims touching on motor vehicles are going to be maybe a lot higher than claims touching on other types of assets. For the simple reason also that motor vehicle insurance is compulsory. So you would want to imagine that most of the motor vehicles are insured. And therefore, most of those motor vehicles which were affected by the floods are likely to be insured, and therefore they are likely to translate into claims. The other area where I expect an elevated the number of claims is in household insurance, so-called domestic package. I would rather call it household insurance for simplicity.
Yeah.
That we expect that we are also going to have an elevated number of claims, particularly so if you're talking about Nairobi, from the lower parts of Nairobi. You know, water drains from this side of Nairobi and it drains towards this direction. The South Seas of this world, the South Bs, Buruburu, those areas. We expect that there is going to be a high inflow of insurance claims. My fear, and this should be the fear of anybody in the insurance sector, is if we are likely to be confronted with an insurance claim coming from road construction risks. Because in as much as there may not be many, if one comes through, is likely to be, the cost of that claim is likely to be huge.
All right. Now, of course, one of the other thing that we have seen in Kenya particularly is the fact that insurance penetration is still very low. Now, when you talk about household insurance, do we have numbers to know what percentage of the entire market does household insurance account for?
Yes, we may not know in terms of the numbers, but probably if we had a chance, then we'll be able to give you the numbers by way of premiums. But the fact of the matter is that very few Kenyans really come forward to take out insurance cover, even for the household, for those houses. The only people that I know of who would normally, under normal circumstances, would come out for insurance covers without persuasion, without a lot of persuasion, are those people who are running big industrial risks. Like if you went to industrial area and you're talking about almost all those factories that you see in industrial area, just about nearly all of them have an insurance cover. The problem that we have is when it comes to individuals, you and I, approaching insurance companies for, well, sometimes it's perceived to be expensive. That may probably keep people away.
Yeah.
But I remember I said perceived, because insurance is not expensive as people actually tend to think. All you need to do is make an inquiry, and you realize that most of the insurance covers, like the household insurance cover, is extremely affordable. Extremely affordable. I wish people could just make inquiries and they would know how affordable it is. Because with about 5,000 Kenya shillings, 5,000, 10,000 Kenya shillings in a year, you can cover most of your goods in your house, including the house itself.
All right. Now, there is a perception, and the perception in the market as it is they see insurance as a luxury for the wealthy. Now, when you look at the impact of the flooding that has happened over the last month or so, those that have been the most affected are those in informal settlement. How do we demystify this and get this product to that category of Kenyans?
We do carry out a lot of consumer education programs. Right now, you note that IRA is also carrying out a consumer education program on, I don't know whether it's Citizen. Yes, it's already carrying out a consumer. So we have this concerted effort between IRA, or the Insurance Regulatory Authority, and ourselves to, as much as possible, inform Kenyans about the importance of insurance, the role that insurance plays in their lives. But as you rightly put it, people worldwide, not just in Kenya, they see things happening to other people. They don't see things happening to themselves. When there is a fire, you imagine that somebody else's probably house is going to burn, but not yours. When you see an accident, you imagine it's going to happen somewhere else. People always talk in terms of other people, but you never see yourself being the culprit at that particular moment in time. Right now, we are talking about those people who are affected by floods. We are talking about people who are affected by floods. We do not imagine that we would have been part of those people who are affected by floods. And therefore, for that person who was not affected by the floods, this year's floods, don't imagine it will never happen to you. And the reason why you need to have that protection, because insurance, you only realize the importance of insurance as and when you experience a loss. That's the only time that you realize that you experience the importance of insurance. But it's also important to know if you are carrying risks, because we are all carrying risks. Mm-hmm. We are all carrying risks, whether it is business risks, whether it's life risks, whether it's other accident risks, we are all carrying risks.
Yeah.
And the moment you appreciate that you are carrying risks, then you need to sit back and ask yourself, where can I transfer this risk? And insurance companies are always ready for you to transfer the risk to them, but at a small price, what we call a premium.
All right, but again, the concern that I'm sure a lot of insurance customers are going to complain about is the payment of these claims. And there are those firms that are going to say this was an act of God. We do not insure around that, or your cover does not cover that. So what is their redress, and what are those activities that may be considered act of God?
Right. Let me demystify that and clarify that. That you do not have an insurance cover for floods on its own.
Yeah.
You do not have cover for something like bushfire on its own, or forest fires on its own. You don't have that kind of cover. But you have a fire insurance cover. Within the fire insurance cover, that is where things like floods are covered. That's where things like lightning is covered. That is where bushfire is covered. All right? So you need to take out a fire insurance policy, which is now going to give you all these covers that you are calling the acts of God. Yeah. They are all covered there. So let nobody imagine that insurance companies are going to refuse to pay your claim because of those things called the acts of God. They are all covered in those policies.
All right, now, and I just want you to help an SME listener, for instance, who wouldn't know where to start. How do I get a cover that then covers my business, my Mtumba business? I'm in the retail space. What kind of covers are available in the market that would cater to that clientele?
The covers are many, and you start by asking yourself, in whatever language, what risks face you? What risks are you what risks are you carrying?
Yeah.
If you know you have started a business, you know there is a likelihood that somebody could break into your premises and steal. That's a risk you're carrying. If you're running a business, you know very well that you could have a fire. And or a fire could start from anywhere and cut down your business. So that's a risk you're carrying, right? When you're doing business, you know very well that there is exchange of money. So there is some money in the premises, and people could come in and steal the money. Forget about just breaking; they would also probably steal the money and steal the stock. That's a risk you are carrying. You yourself as a person, you are walking around, whether you are in your business or whether you are going to a place of work or wherever you are. You are exposed to the possibility of falling down or being knocked down by a car or whatever. And therefore, you need to know that that's a risk you're carrying. Then you ask yourself, okay, all these risks I'm carrying, where can I get insurance protection from? Insurance companies are there. They have products for all the risks that you can imagine of. All the risks that you can imagine of. Business, risk relating to you as a person and risk relating to the business that you're running.
Yeah.
All you need to do is identify your risks and then just make a call to an insurance company. Right now, I think we have developed an app where you can we are populating this app with most of the simple insurance products like fire, like motor, like personal accident, like domestic package. Right? It's available. If you go to that portal or to that app, then you are able to see all the types of insurances that you can buy if you are doing a business or as an individual. Then we have also populated it with all the insurance companies who provide that kind of insurance cover. We have even populated it with the premiums that you'll pay for, or just seeking a quotation.
Yeah.
So we are using all manner of channels for distribution of insurance products. Mm-hmm. Now we have gone digital in as far as that one is concerned. Alternatively, just make a call to an insurance company, or walk into an insurance company, or get in touch with an insurance broker, or get in touch with an insurance agent.
Yeah.
The distribution channels are all over the place.
All right, because the other deterrent for a lot of SMEs particularly is the question of premium and the determination and calculation of it. Yeah. Could you help us understand how does an underwriter then determine this is the amount of premium that you're going to pay?
That is what is called underwriting. What you're talking about is what is called underwriting. When you present a risk to an insurance company, then the insurance company does the assessment of that risk. If that risk is, for example, this building where we are sitting in, and I can assure you this is insured, right? Whoever insured this building, we give, there is a form that they will ask you the details about the personal details. Then they will ask you information about the risk itself. They will want to know, where is this building located? How is this building constructed? Is it constructed of timber walls, or is it constructed of stone walls? How is it roofed? Is it tiles? Is it iron sheet? All these are the considerations that an insurance company will be looking at. That is what is called the process of underwriting. Then, after assessing all that, then it will tell you, this is the amount of money that you'll be paying per year.
Yeah.
And as I said earlier, insurance, particularly so for property, and insurances also for the person, extremely cheap. But the perception is that it is expensive, right? Let's do away with this perception. Seek information. If you now want to know whether actually insurance is expensive or not, seek information from the insurers. Present a risk. Let somebody tell you, this is the amount that you'll pay in a year. If you think then it's expensive, then of course you drop out. Mm-hmm. But what it would surprise a lot of people is to know that, particularly so the SMEs, is to know that the risks that you are carrying are very, very, very heavy, but the premiums that you would have to pay for them to be covered is extremely manageable and affordable.
All right, now, and particularly on this aspect of flooding that we have seen, what are some of the reasons that maybe an insurance company will not honor its obligation to pay claims? What are some of those reasons that SMEs, for instance, could have that will make an insurance not honor their claims?
No, none. None. If you have a fire insurance cover, your flood risk is covered. There is no excuse that any insurance company will come in and give why they should not order your claim, or even a motor vehicle. There is nobody who will going to come and tell you, I don't know, you are doing what. No. All these risks are covered.
Yeah, because for motor vehicle insurance, for instance, you'll find those that have a third-party cover or a comprehensive cover.
If you have a third-party cover, it's very unfortunate, because what that means is that you do not have cover for the vehicle. The cover that you have is if you damage somebody else's vehicle, or if you injure somebody else, not yourself. So basically, the cover that you have taken is for that other person, not yours. So if your vehicle is swept by the flood and you had not insured the vehicle, right? You had insured the risk, the risk that will come through as a result of you damaging somebody else's property or harming somebody else, right? So your vehicle was not covered. But if you have a comprehensive cover, there you are.
But again, Tom, there is the question of negligence. There are those who will argue and say you were warned not to cross this bridge, for instance, and unfortunately your car was damaged or swept away.
No.
Would you still be covered?
The vehicle, you will be paid. You will be paid. Forget about the warning. You will be paid. Okay. Because the policy does not talk about negligence. The policy does not talk about those things. Yeah. It says if your vehicle is involved in an accident, we'll compensate you, we'll either repair your vehicle or we'll pay you cash, all right? Or we'll pay, if it is a complete total loss, then we'll pay you the full amount.
All right.
Yes. Or some of those things are mates, let me tell you. They are mates.
All right. So let's talk about the number of claims that maybe you've had from your members. As of right now, it's been about a month, and I'm sure claims have been made. Where are we in terms of the value of these claims that cumulatively you have received from?
What happened is when we wanted to start the process of collecting the data, we learned almost immediately that the Insurance Regulatory Authority was collecting the same data. So we say there is no point of duplicating because we work very closely with them. The moment they get the data, we'll be able to get it from them. We did not think that it was necessary to duplicate the effort because we will be asking our members, can you report these claims to us? At the same time, they are being asked by IRA, can you report these claims to us? So we say, let's just one of the bodies collect the data, then we are going to share.
Alright, so at the moment we don't know the value of that.
We don't even know the numbers because we say let the IRA do the collection and then we'll share the data.
Alright, let's talk about microinsurance. And of course we know that this is a product that is yet to fully gain traction in the market. And this is from my interaction with IRA. They're saying that in as far as the payment of premium, there's some areas that still need to be addressed. And I just want to know from Association of Kenya Insurers, and I'm sure some of your members are already offering these products. I want to know, in terms of staggering the payment, what has been the impact of that in as far as getting it to gain more traction goes? How has that been so far?
I may not authoritatively be able to comment on that, but what I know is that first and foremost, let's agree on what we mean when we talk about microinsurance. What are we talking about?
Yeah.
All right. And is there a major difference between microinsurance and the rest of the insurances? Let me also tell you that there is no difference between microinsurance and the rest of the insurances. We are only talking about insurance products for those small businesses. For the small businesses.
Yeah.
But the cover that you are going to get is the same cover that you will get even if you do not call it microinsurance. So I want to remove that myth so that those people who are out there in Gikomba and wherever else who are running the SMEs, they should not sit there waiting for something called microinsurance for them to take out insurance cover. Talk to any insurance company, and you will get cover, whether it is micro or whether it is big, you still get the insurance cover. But coming back to your question, in terms of affordability of paying a single premium, because that's basically what you're talking about.
Yeah.
I may not know exactly what different insurance companies are doing, because the law as it stands, and I'm talking, there is a difference between law and practice. The law as it stands requires that if every time you take out an insurance cover, you need to pay your premium on the spot. In fact, insurance companies are not supposed to go on cover before the premium is paid.
Yeah.
That is the law. But practice sometimes is not exactly, the practice does not completely comply with the law as it is. Of course, I'm not encouraging people not to comply with the law, but I'm stating the situation as it is. You still, if you approach an insurance company and you came up with a premium payment plan, I do not think that you'll not be able to get cover. So walk to an insurance company, even if it is the SMEs, the so-called the microinsurance, walk to an insurance company, give your insurance payment plan, and then you will be able to get cover. That is for certain. You will be able to get cover.
Right, because I'm sure for some of these SMEs, the concern they might have is that are there limitations in terms of my turnover for me to be viable to get a cover?
And I said no. There is no limit. There is no threshold that you are required to attain so that you can access an insurance cover. For as long as you are able to demonstrate that I'm doing this business and I'm running a risk of fire, I'm running a risk of ABCD. But for purposes of distinguishing between what would be referred to as microinsurance product and the rest of the insurance, I don't know how to define it. There is a threshold that has been introduced so that you may qualify now to be called a microinsurance product, and the limit is 500,000 Kenya shillings. So if you are running a business and your turnover is 500,000 and below, or your entire risk, the value, I'm talking about the value of either the stock or the value of the building or the value of both the stock and the building. If it's up to 500,000, then your risk qualifies to be referred to as a microinsurance risk. But that does not stop you, and that's why I said, don't wait for somebody called a insurance company to come and insure you, so that you sit back and say, see, because mine is $500,000 or less, I must wait for a microinsurance company to come and provide me a microinsurance insurance product. You will get covered by any insurance company. Any insurance company, whether it qualifies to be called a microinsurance company or not. Those risks will be taken up by any insurance company.
All right, Tom, before we switch gears and talk about the finance bill, there's the question of looking at the bottom line of a lot of these underwriters this year. Where do you see what do you see as the biggest impact in terms of their bottom line? Particularly, you've talked about the anticipation that claims are going to increase. What then does that do to the sector?
If you look at the performance, we've just started seeing the numbers coming through, and there's a general statement that there has been a big improvement in terms of the bottom line. That is across the board. Now, of course, there are those companies who made losses. There are those ones, because not everybody makes a profit. There will be those ones who made losses. There are those ones who made modest profits. And there are those ones who have made sizably good profits. So we hope this trend will continue. You know, we are in the risk business, in the business we are in the risk business, right, as insurers. So you can never be able to predict what is likely to happen next year, because you could have a few very huge insurance claims, and they could very easily wipe out any projected profits, right? So we are not like, for example, banking, where people say, okay, people will continue, you know, the moment the disposable income increases, you expect Kenyans to continue bank. Ours is risk business. That's what we do. So you could have, like now, nobody was expecting we are going to have floods. All right. So the fire business, the fire class of business, is expected certainly to perform worse this year than it did last year, purely because of the floods that have come through. So our business could very easily oscillate depending on the environmental circumstances. And now that we are going through the climate change stories, right? Insurance business is becoming a very risky business, not only in Kenya, worldwide. It's becoming a very risky business. Like, for example, if you're in a place like US, would you be insuring against forest fires? I don't think there's anybody who would want to insure against forest fires. I am not too sure there are many companies now who would want to insure businesses in the US against things like cyclones, because they are being hit left, right, and center. So we are exposed to effects of climate change, but we are not going to shy away. until it completely becomes uninsurable.
All right, now let's switch gears and talk about the proposals in the Finance Bill 2024. One of the things that we have seen in that Finance Bill is a 2.5% tax on the value of the car that is to be charged at the point of insurance. And I just want to get it from you in terms of a sector. On one hand, the insurance sector is trying to push up penetration. At the same time, when you bring in a tax like this, what is going to be the net impact of this then to the entire sector?
It's going to be a big one. I can tell you for sure, even from where I sit, I am not likely to continue having comprehensive insurance cover. Personally, I will not be able to pay that premium, because the effect of this proposed 2.5, the so-called motor circulation tax, whatever it's been called, is basically what it's going to do is to push the insurance premium rate. We are currently around 5% for comprehensive insurance cover, and Kenyans are struggling to manage that 5% of the value of the vehicle. Now we are loading that by another 2.5%. So we are pushing it to 7.5. If Kenyans have been struggling with 5%, and that explains why a good number of Kenyans are on third party. Now
do we know how many?
I may not know how many, but if the rate was just to come down a little from 5% let's say to 3%, would encourage a lot more Kenyans to take out a comprehensive cover. But instead of now doing that, we are going the opposite direction by increasing the rate by another 2.5%. That is one big disadvantage. The other one is that this 2.5%, you must pay it on the spot. You must pay it on the spot, because the insurance companies, by the proposal, is supposed to be remitting the 2.5%. The fifth, I think the fifth day?
By the fifth working day, yeah.
By the fifth working day. That is it by the fifth working day, or is it 5 days after you have received it? The fifth working day?
Yeah.
Which will mean what?
Within the next 5 days, yeah.
Within the next 5 days after receiving it. Yes. That is my understanding. The next 5 after receiving it. All right? So it is almost cash and carry, because you are supposed to be paid on the spot and then remitted to the taxman. So to come back to your question, that tax is going to have a monumentous impact on motor insurance premium. And you know, motor, as I said earlier, accounts for about 34% of all the premium that is written in this country on general insurance, on general insurances. 34%. Right? So you can see, if it accounts for more than a third of the entire premium, and then you introduce a tax, that is certainly going to impact very heavily on the penetration. The penetration for general insurance is in the region of about 1.2, 1.3, right? So if you bring this in, and as much as we have been talking about low penetration, we will certainly be talking about much lower penetration when we go this route. Yeah. Now the other very big disadvantage that I'm seeing with the introduction of that tax, hoping that it will go through, is the fact that by a lot of Kenyans scaling down their cover from comprehensive to third party, you are exposing those Kenyans to a lot of future problems, because you're having an asset which is like 3-4 million is out there. You do not have comprehensive cover. The moment you get involved in an accident, you don't get compensated. What will that mean to Kenyans? You are making Kenyans even a lot more poorer, because you'll have to look for the 3 million or the 4 million to be able now to replace the replace the car. So I don't know. Maybe there is something else that probably we are not seeing.
Yeah.
But the impact on the insurance sector is going to be extremely heavy.
All right, and it's a good thing that you've talked about the risk of downgrading this kind of insurance.
That's what is going to happen.
Yeah.
Yes, and I gave you my own example. I am not going to insure comprehensive, not anymore. No.
All right, so as we wrap up, there is a school of thought that believes that if this tax was at a lower rate, it would be different, that it would be slightly expensive, but it won't have as much impact as the 2.5. Do you agree with that?
Well, certainly. I mean, certainly, because there is always a big difference between 1% and 2.5%. There is a big difference between 2.5% and 2%.
Yeah.
It will become a little cheaper and therefore probably affordable by a slightly higher margin than those ones who will fall by the wayside because of the 2.5. But my point here is that whichever way, my view is that this is a tax that should be completely be done away with. Not even to start talking about lower percentages, because the impact may not be as big if you reduce the percentage, but the impact will still be there, whichever way you want to look at it. And we have all been crying all over the place that we need to increase the insurance penetration. That is not the way to increase insurance penetration. By introducing other taxes, which actually translate into insurance premium. That translates into increasing the insurance premium. That's what it means. Yeah.
All right. So as we wrap up this conversation, maybe there are those businesses that would want to get a cover, but they're thinking, I'm not in a position to pay the premiums that will be required. What would be your advice for them, and why should they really consider getting these covers?
As I said, don't get scared and don't work on the perception, one, that insurance is expensive. Number two, that even if you go to insurance, there cannot be a way that you can be accommodated for purposes of premium payments. Make the attempt. Walk into an insurance company, right? First of all, get the insurance, get the insurance premium that you are going to pay. Then start negotiating with the insurance company on a payment plan. Yes, don't get scared when you're out there. Come in and bring your problem. Say, okay, this is the premium. Yes. Is there any way I can be accommodated by way of coming up with a payment plan?
Yeah.
Yeah.
All right. And when coming to make claims, what do these customers need to have to prove that this is something that actually happened and this is why I'm making this claim? And particularly when you look at something like floods.
You do not need, it is not your responsibility to do all those things. The moment something happens, all you need to do is come and report. Leave the rest of the business to the insurance company. The insurance company has mechanisms. It has tools of establishing the genuineness or otherwise of a claim. The insurance company is also going to do the what we call the loss adjusting or the loss assessment at their own cost.
Yeah.
So all you need to do is come and report your claim. The moment you report your claim, the insurance company has its own records. One, to prove that you're actually the one who you have an insurance cover. The next thing they are going to do is that they are going to come to the ground and assess.
Yeah.
All right? So let that not bother anybody.
Because there are those who will be bothered, and particularly in as far as the turnaround time goes.
Yeah.
I'm in business, I want to come and make a claim and be paid within a certain time frame.
Yeah.
Then if I have to wait for the insurance company to come and do the assessment, then this might mean that I will be out of business for maybe a month, and that is time that I will not be compensated for.
I agree with you, but the compensation must depend on certain numbers. Those numbers must be established. You know, unlike if you put your money in the bank, you put 100,000 shillings in the bank. Tomorrow, if you walk to the bank and you want to withdraw, you'll be withdrawing the 100,000 or you'll be withdrawing 50,000 out of the 100 because it's already predetermined. But for an insurance business, for an insurance claim, the moment you report it, it must, first of all, it must be verified, and number two, somebody must be able to quantify what you start to be paid. Because we don't pay what you ask for. We pay what should be payable. That is actually the difference. People are not paid for what they insure. You are paid for what you lose.
All right.
Yeah, you are paid for what you lose, not what you insure. It's what you lose, because you can have an insurance for $1 million, right? But the damage that was occasioned by whatever risk, whether it's a flood or whatever it is only 200,000. So you're not going to be paid $1 million. You're going to be paid the 200 that you lost.
Yeah.
Yes.
All right. So as claims continue to increase, we're likely to see a strain in this claim settlement. So by how many days, for instance, should customers expect that normally my insurance would pay within a week? By how much longer will it take now?
Right. Insurance companies would want to pay you as quickly and as fast as possible. Immediately after you have reported the claim, the documentation has come in, the verification has been done, all right? Then the insurance company should pay you almost immediately. But there is also a law that governs the period within which an insurance company, an insurance claim should be paid.
Yeah.
And the law says very clearly that you receive all the documents, you verify the claim, you identify the person who is insured, and then you must pay that claim at the longest within 90 days. That is the law. But as I said, the insurance companies would always, for as long as that process of verification is done within the shortest time possible, then the insurance company should pay. They do not have to wait for the 90 days. But you know, there are also some very complicated claims. If you talk about the claim for I can't remember this factory that the mattress factory that got burnt in industrial area a few months ago. That is not a claim that is going to be payable within 90 days. The process of verification of what was lost, because it is in the hundreds of millions, then is likely to take slightly longer than that.
All right. So, yeah. Tom, your final words.
My final words is I would want to go back to the finance bill and plead with the authorities that we are trying to grow insurance business. And this is for the benefit of everybody. Insurance business or insurance companies are major mobilizers of funds. They are major mobilizers of funds or capital, whatever you want to call it. And therefore, when we come up with laws which are likely to have an impact on the growth and development of the insurance sector, is this not to the benefit of anybody? We are also big employers, for certain. So my appeal would be, let somebody look at that proviso in the finance bill, talking about the introduction of the 2.5% tax on motor vehicles. Let them also consider us as individuals, right? Yes, because the level of taxation in this country now is becoming a little too much.
All right, Tom, thank you so much for making time to be on Market Pulse this Wednesday. And of course, that's all the time we have for you. Let's do this again, same time, same place, right here on Hot 96.
Thank you.
All right.
We are done?
I think we are good. Thank you so much.
Karibu sana. Yes.